Hey guys, this is Adam from dodjit.com and this is your video briefing for the 14th of May 2009. Now, we posted a video briefing this week and we were stating that we were expecting a correction. It was bound to happen. It doesn't really make any sense that the markets are just going to continue higher and there's not going to be any profit taking along the way. It just doesn't make sense. Now, we received this massive uptrend. You can see it here. Massive uptrend since the beginning of March, and there wasn't really any profit taking along the way. Now, yesterday we dropped lower. We can see it here. And basically what I'm looking for is I'm looking for a further correction. I would like to see a little bit of a deeper correction. And what I'm going to do is I'm going to just use my Fibonacci tool just to take all this rally and to see up until where we can really correct. Because I'm looking for a correction around this area, and then what will happen is it will probably be in line. If you look carefully, I'm going to just draw. We've got all of this clutter around here. Let's just take that like that and just paint it in another color so we can see. So we've got all this clutter all around here, and what I'm looking for is I'm looking for a correction that's going to be in line with all of this clutter. Now, what I reckon is we are going to receive some support along the way. And listen, the markets can always surprise us. Listen, they might even bounce back today. What I am expecting some further profit taking. I don't know if it's going to happen today or tomorrow. We've also got some important numbers coming out. Tomorrow we've got the CPI figures. We've also got GDP results from Europe. So we could see a little bit of volatility. Could see volatility increase. Now, the reason why I'm stating is this could only be a mere correction is because we didn't really receive a massive move into the dollar, and we're going to flip over to that chart in just a second. We're going to see how the dollar's been reacting because we are losing ground on the dollar, and over the last couple of weeks, couple of months, we've come to become accustomed to a situation whereas when there's problems in the equity market, everyone runs to the dollar. And what we're looking at the moment is we're looking at yes, equities are rallying, the dollar is dropping. Now, if this is going to be now a major drop, what I want to see is also I want to see a rush back into dollar assets. And that we're not looking at the moment. We're not seeing that type of volume rush back into dollar assets. So keep an eye out at the moment. We could receive a further correction. If we're going to receive a further correction, I want to look to make sure to see if we're going to retrace back to one of these levels. Could even receive support on our 50 moving average. We've received support on the average quite a few times in the past. We can see this level around here. We can see this level roughly around here as well. And we can see it's acted roughly the same in the past. We did break it higher here, but we retraced back down around here as well. So keep an eye out. We could be looking at only a correction. And I don't know, things look like they are improving. I know we received some bad data yesterday, especially from the housing sector. But, you know, in the end, keep an eye out. Make sure you're not going to fall into any traps, because in the end, when we're looking from a historical point of view, we're already coming up to the end of the second year of this recession, or we're in the middle of the second year of this recession. And from a historical point of view, recessions have normally only last up to roughly around 2 years. So this could be the start of a market bottom, and normally market bottoms are characterized by a lot of volatility, bouncing up and down, and you know, we could receive a nice rally, then a massive drop. But you know, we have to take into consideration that this level around here is still classed as our lowest levels. Anything that's going to correct and continue higher, that's what I'm looking for at the moment, until I receive other confirmation that's telling me, yeah, we're tumbling lower. And obviously this is gonna require, I think this is gonna require something like, you know, a major bank to collapse or something like that to really set off the selling pressure once again. So what I'm saying at the moment is like this: take into consideration that we're looking only at a mere correction at the moment. If we do really continue to plummet lower, so then obviously, you know, we're gonna be looking at short positions, especially. We're going to be looking at short positions in the market. We've still got major resistance around this level around here. And if you take into consideration, we've got the 200-day moving average and the 1,000 psychological level. We're really situated in a situation that at the moment you might even want to think about, you know, putting cash aside and just seeing how the market plays out, because we've got a lot of resistance and support on both sides, and I think it's all going to come down to market data and how the Obama administration is going to really deal with the situation, and then just by a breakout of either side, we're going to really know what's the main direction. Now, like I promised you, we've got the dollar index, and this is going to really help some forex traders. If you look carefully, we've broken our 200-day moving average coming down. We also, and we've posted this quite a few times, we had this trend line. I can't fit it here on the chart, but we had this trend line coming up like that. We broke it down. We really dropped lower. We crossed our 200-day moving average, which is actually a good sign for equities, because it basically means that this safe haven, the dollar safe haven, investors are starting to draw their money out of dollar safe haven, and they're starting to seek more riskier investments. So this is a good sign. This is actually a good sign for the economy. What I would take into consideration is we are coming close to oversold conditions. We can also compare it to previous figures. If you look carefully around here, we also received a kind of oversold condition. Then we received a rally. Also around here, look at this, rallied higher. So we are now starting. You can look at if you look carefully at the RSI here, this is the dollar index from yesterday's close. You can see that the RSI is starting to turn slightly higher. So I'll take that into consideration. Now, what I just want to do, because we do have a time limit on these videos, we can't exceed 10 minutes. I just want to fit in one chart for you guys, and this is going to be the euro dollar chart, because we've really received this nice rally lately. And we are now starting to form this kind of like double top situation. I don't know if it's going to lead into a double top situation. Let's just analyze the chart for a second and see where it's going. Alright, so this is the euro US dollar chart. It's a daily chart. Now, what we're looking at the moment is like this. We've got this strong resistance level roughly around here. But then again, and this is something that actually we posted today on today's article, we've got this secondary trend going up like that. So we're now in this type of channel. We're going higher. There's no doubt about that. And basically, we've received a little bit of resistance around this area. We haven't broken it yet. Now, things do look like they're starting to improve a little bit in Europe, and I think this is why we're receiving a major rally. If we look carefully at the indicators, we can see that we're receiving a little bit of divergence around here compared to the price pattern. But overall, things don't look so bad on the euro against the US dollar. If you're in the trade at the moment, then, take into consideration these two lines. We're talking about the resistance level and this support trend line coming up like that. If you're thinking of entering the trade, I don't think it's quite a good time to enter a trade at the moment. I would wait for a breakout of either direction. Either we're going to receive this kind of M pattern, you can see, and then it's going to just head lower like that. And then what we're looking at is we're going to class this as a type of double top situation. Or we're going to break up higher, and then we're going to obviously form a higher high compared to this high. And then it's going to give us real nice confirmation that we are heading higher. Obviously, our targets are going to be our next level, roughly around here. We can even target this level. I don't think this level around here, the 1.3935, is going to really make much of a difference. I think if we're going to really break out of our current levels, and I'm talking about the 1.3735 level, so then we're going to head higher. That's not going to be a problem. It really depends what the data is going to show tomorrow. Hope you enjoyed the video. This is Adam from dodjit.com.